hereby call this meeting to order, and there we go. There we go. Okay. Sorry for being a little bit late. Are there any corrections or additions to the minutes? Do I hear a motion to approve the minutes from the last meeting?
I'll make a motion, we approve the minutes from the last meeting.
Yeah, I second.
All those in favor?
Aye.
Any opposed? All right, passes. Let's do a quick round of introductions for those that are here. Let's start all the way over in the corner.
I'm Stacey Jones with Fpdr. Kim Mitchell with Fpdr. Julie Barber, Fpdr.
Noel Stevens, retired firefighter.
David Short, retired firefighter.
Nelson Hall Bennett, Hartman attorneys, appearing on behalf of Portland Fire, Portland Police, and Portland Command Association for Disability Matters.
Laura Downhauer, outside legal counsel for the fund.
Kristen Johnson, Commissioner Hardesty's liaison.
Joe Jankowski, retired fire.
Don Ford, retired fire.
Henry Gripper, retired police.
Frank Lucci, City Attorney's Office.
Party Nine, City Auditor.
Bob Hutchins, I'm the liaison for Fpdr, retired.
Sylvia Moore, Police Liaison.
Hiding behind the post over there. All right, is there anyone signed up for public comment?
Yes, Mr. Joe Jankowski and Mr. Del Stevens.
Gentlemen, please come on up. You'll have your 3 minutes. You guys can choose who goes first.
Good afternoon. I said my name is Joe Jankowski. I'm retired fire. About 2 months ago at the last meeting, I was asked to come back with a solution. And I've got 3 minutes here to give a solution, and I think something can be accomplished in that 3 minutes. First off, I want to thank the board for taking the position to allow me to be here and do this. This is a major step from my point of view, from working on this for a very long time, to have someone actually listen. And so I appreciate it to everyone up there. You know, kudos to you for listening and just not saying get out of here or whatever. You know, we've done this, we've done that. So as far as a solution, my suggestion was a suggestion that was made at the meeting by Trustee Hunsaker, is that we form a group, a committee. We call it a task force and have stakeholders involved to look at the issues here to resolve it. I think the resolution can be done. I think it can be fair. I think it can be have minimal impact on everyone, and especially the taxpayer, because they're the ones at the bottom line when it all comes down to them, and that's who we all. At least that's who I worked for. So the issue that I would start with would be the disability retirement. I know it says we have disability retirement, but we don't have disability retirement, because if we did, we would never removed it from the charter. So my suggestion is that we put a group together. It can be a public committee, and whether it's all the board members or 1 or 2 board members, to have that. If we can meet after your meeting to make it easy for you, or before your meeting, what's convenient for you. But I wouldn't think it would take too long a time to bring the issues on the table, discuss them. I understand you'd have to talk to your side, but people in the city, and then I hope that we have the equal support from the other side, from the retired associations, unions together, to come together as one for a solution to resolving this and putting it away forever. And then it's done. And we don't have to bring it up again. We don't have to discuss it. We know we're in compliance. And the next police officer for a firefighter that gets hurt is covered. You know, they don't have to worry about that. They don't have to worry about an issue, what do I have, what I don't have. It'll be very straightforward. They'll have what the law says they're entitled to have, and that's what my suggestion was before. We find one that's compliant with the law. And it's there, and I believe we can do it and work together with that. So that's my 3-minute suggestion on resolving this, is working together to come to a solution.
Thank you, Mr. Smikowski. Anybody
Thank
have
you.
questions?
Are there other issues that you would propose the task force consider, or is it strictly the disability retirement?
I would start there, and then we can talk about the other issues. I think that that's probably the main starting point, because that's been on the record since 1971. That's been the longest part of the record. It's never changed in the law. So that's been the one impetus that's been there from day one. And along the way, different things came along the way. As they did, we can discuss them as well and say, hey, okay, this happens here, this happens here. But that's the main one that's been there since 1971, House Bill 1849.
Thank you, Mr. Jimkowski.
You're welcome.
Mr. Stevens.
Good afternoon. My name is Dale Stevens, and I used to be a trustee on the board. I spent 3 years, and I was very active during pension reform in 1989 when we reformed our pension. And the comments I have today concern revising and reforming and improving our pension. And this is the last meeting of the Fire and Police Disability and Retirement Fund that I will attend as the president of the Portland Retired Firefighters and Widows Association. I have devoted about 30 years to working to improve the pension and the disability benefits of our members with a mixed record of success, but no lack of belief in the merits of continuing the effort. My time today will necessarily be limited by the constraint of the 3-minute period. There will be no time to explore or comment upon the many legal and human issues that are at the heart of this subject to show how we have arrived at the juncture we now find ourselves. Without the naming of some individuals responsible for creating and continuing the inequity of these unfair and mostly not in conformity with the law benefits, it must be said that there is ample evidence of this situation, and it has been put aside for over 30 years by the people who were in a position to make the necessary reforms. The people who risk their lives and health over long careers to protect their fellow citizens likewise deserve the best benefits we can provide for them and their families. Our members who are dealing with the problems coming from disability and infirmity in retirement should not have to wonder where their protection can be found. They are enumerated in laws and provided for by their pension systems and insurance plans. There seems to be a new recognition of this board about the current imbalance that our benefits display. And I believe there's a desire to address it and do something about it. It was suggested at the March meeting that it would be advisable as a first step to identifying the existing inequities to create a balanced task force out of interested stakeholders to compare the existing benefits and see if they are compatible with what is required according to our laws. I wholeheartedly agree with this proposal. Therefore, as the current president of the Portland Association of Retired Firefighters and Widows Association, I request on their behalf and of all of our members that you create and impanel a pension task force at your earliest opportunity. I would like to leave you with the timely saying that it is never too late to do the right thing. And I'd be happy to respond to any questions that you might have.
Thank you, Mr. Stevens. Any questions?
I have only one question, and that is both gentlemen have suggested or proposed a task force to pursue these issues. What's the appropriate mechanism for us as a board to discuss and decide whether we want to proceed?
Let me throw something out there and everybody can respond, because I was thinking the same thing. My inclination is to have us digest it a little bit, think about what the best way to go forward is, and have a public discussion at the next meeting as part of that. I know we can't make any decisions sort of as a group outside of a public meeting, so I'm a little leery of that. I'm also open to suggestion from our Fpdr staff as the best way to go about it, but that was sort of my initial thought about it. I don't know if that makes sense to people. I need to think about sort of what the implications are of what that would be. I'm not prepared right now to sort of say, yes, that's absolutely the right thing to do, or no, but I'm open to suggestion.
Well, Trustee Hudson made the suggestion, and he also said if it's within the powers of the board, so I understand that. So, if it's within the powers of the board, great, then that's something we can accomplish then. And I appreciate that.
Right, I also remember
one specific task that I wanted brought to the board that I still have not seen is what is the question for the task force? What is the question? We don't have a question yet. We've got a lot of data, we've got a lot of input, we've got a lot of information given to us, but there's so much of it that for us to form a task force just out of all that information doesn't give us a goal or a guideline. We still have not been given a specific request. So as a board member or as a trustee, I'm looking for a request of what the task, before I make the decision if a task force is necessary or not, I don't know what the question is.
Okay, well then, I guess my question would be then to look at a disability retirement that complies with the law that we say we have, and that we say we have had on record. I believe Trustee McClure.
Too much further because we know that information. I hate to cut you off, but
Fine.
we have that information. We've talked about that before. But again, my question to you was, I understand your point of view and your passion in that. But what you haven't given us is a direct question of, this is what I see, this is what is here. We would like you to make a task force to focus specifically and solely on that. I only know your side, right? And that you want an equal to or better than test. I still haven't, it hasn't been narrowed down enough for me yet.
I don't think an equal to or better, my own personal opinion, I don't think an equal to or better test is needed right now because you're lacking one of the components that's been there from day one. So if I was an actuary and certified by actuary to follow the law, and I come in here to follow the law, I look at Fpdr, and I say, okay, the law says you have to have House Bill 2280, the most current legislation, you have to have a disability retirement with post-medical benefits, service pension with post-medical benefits, and they define what it is in the law. I look at you and say, where's your disability retirement? Well, you have a disability benefit, yes. It's and Nelson Hall clarified that on July 22nd, 2015. He says, FPDR is our workers' compensation, so that's our benefit. We have a version of workers' compensation under the law, and that's the benefit we have now.
Catch up, but on the timeliness issue here, the question was the task force, and that was my response to the task force.
Right.
So I don't want to go into the weeds too far of the data and the input and stuff like that. That could be safe for a later time. But as far as the task force question, I'm still waiting.
To look at disability retirement, to have FPDR have a disability retirement that is compliant with the law, because we don't have one.
So just to clarify, I know you just said it, but so what you're saying is you don't feel that we're complying with the law as far as having a disability retirement?
I don't want to put emotions. It's not my feeling. It's just that my observation is that we do not have one.
Okay, well, so I guess what I'm getting at is we're going to ask our legal counsel the question, because I don't think anybody up here is an attorney.
Sure,
If they are, they don't represent the board. So we're going to have to ask the question from our independent counsel and our legal counsel, the question that you're asking. So I just want to make sure the question is as simple as that. Are we complying with the law by our disability system? And that's different than, is it fair? Is it the right thing? If the question is it legal what we're doing, or is it illegal what we're doing? And if it's, we probably should get some, not just yes or no, we probably should have some type of evidence, but
Fair enough.
Is that the question you're asking?
Right, that we should have, if we didn't have a disability retirement, if we had a disability retirement, we would never remove that in Resolution 501 on September 22nd, I think it was, or 2015, when they had the resolution, and it was 3 votes yay, 1 vote nay, because they said, what do we call it when a guy gets hurt, as firefighter, police officer gets hurt or shot? What do you call it when he goes off work? What do you call this person? Well, we have one pension, 2 ways to get there. Well, that's not what the law says. The law, the same laws that I swore to uphold, and we all swore to uphold, says you're supposed to have a disability retirement with post-medical benefits, and explains what it is. It doesn't say you have to have exactly what PERS is, but you're supposed to have that aspect of it. And we're lacking that one aspect of a disability retirement benefit, because when a person does go off, what do you call them? You call them this, you call them that. I mean, so, and you're doing it for the members. The whole purpose we're here is for our members. That's the reason we're all here, is for our benefit of our members. We're not here, I mean, yes, with concern for the taxpayer, because we have to be fiscally responsible along that way. But if the law says we're supposed to have these things, then and you have the ability to correct that, and and the courage to bring it forward even, because this is big. This has never happened before. So to me, once again, kudos to you for bringing it forward, even having the courage to discuss it, because that hasn't been done before, and you probably know yourself. You've been here before, you know, and I've been here before, and I mean, you voted nay, and you know, and I gave you kudos for that again, because you recognize, hey, there's an issue here, it's not quite resolved yet. We're voting on it, but it's not quite resolved, yet it was resolved. And that what it was from that day
So if
forward.
I hear correctly, you're responding in a positive affirmation to Trustee Lehman's
Oh, yeah, definitely.
phrase of his question. So
Yes.
with that being said, if I hear an affirmation to the framing of his question, prior to a task force being formed, we could ask as a board for our legal counsel
Sure,
to
fair enough.
construct a presentation, 3-minute, 5-minute, whatever they would need to present to us. Then we can move forward.
Sure, fair enough.
That was
My
exactly
understanding?
what I was going to suggest.
Thank you, yeah.
Yeah.
Fair enough.
Could you rephrase your question, Trustee Lehman, just to make sure that we're clear?
Well, I think we'd need to talk about, we'd probably need to make a motion to direct, or we could just ask, but, so we could ask right now, so that way, when we ask the question, you agree with the question, so we don't come back and say, that's not what I asked. So I guess what we're asking, or what you're asking, is for us to show our opinion of why what we're doing is legal, and prove to you that what we're doing is the legal route, and what we're doing, our disability system is in line with the law in the state of Oregon, and
You know, I would, if I can jump in.
Sure, absolutely.
Yeah, I think that as a board, we really don't have an obligation to affirmatively prove that it's legal, right? But what I think we're being asked to do is to analyze whether our benefits still meet the equal to or better than test, given the absence of a disability retirement.
Sure,
Is that
sure.
correct?
I mean,
Yeah.
it's on the record that there's no disability retirement. I mean,
So-
we're not hiding that fact.
Yeah, so what we're saying is that as a board of trustees, that we need to consult with our outside legal counsel
Fair enough.
on that question.
Just a couple things here on what we're looking at. Equal to or better then is different than whether or not we should, by law, be having a disability retirement. So I want to split those two out. They're two different things. So I think what you're looking is if I may phrase this, you're looking at the PERS statutes, and per the PERS statutes, anybody who's offering a replacement of PERS has to have the same benefits that PERS offers. Is that what you're saying?
Well, that's what it says in the Fpdr documents, that we have a disability retirement. I mean, it's very clear in there. I have documentation from PERS telling me exactly what I'm getting, and I can show you the letter. I had an attorney went to PERS, and they said, Joe, you're getting this, this, and this. As per your charter, it says you're getting this, this, and this. And I said, that's great, thank you, PERS, but I'm not getting any of that.
So maybe what I could suggest is that we ask our outside
fair
counsel
enough.
for the trustee board to advise us on the relevant legal standards, and then also how our program meets or doesn't meet those legal standards.
Sure, fair enough.
And Josh, I may give you, because you guys want to talk about it publicly, there is a way to do it by having a work session with the board where it would be a public work session, but the only people talking at the work session would be you and any guests that you bring up. So it would be in this case, would be the attorney, maybe somebody from Fpdr, just so you can get your understanding of this. And then once you get that information, you can better form what you're wanting the attorney to go away to, and then you come back into a next board meeting and have a full board meeting open to the public. But this is just a way for you all to get your grasp around it, if that's the direction you want to go.
Yeah, I think that
And
would
it
be
wouldn't be in a
helpful.
board meeting.
I think so too. I think we're gonna have to be a little creative with scheduling, given between now and January, all the holidays. But I think that may be the way to go too.
Yeah.
Yeah.
And this is what city council does when they
Yep.
have this. They get into it where they talk about it publicly among themselves and may bring in an informed guest that can help them answer their questions. And that way, it just allows you to talk among yourself, but people can observe you doing that discussion.
Perfect. I like that approach too, because one of my concerns as we discuss this is that, you know, to use the Shakespeare line, a rose by any other name is still a rose. I want to, you know, make certain that as we're talking about a disability benefit, the fact that it may not specifically be called a disability retirement benefit doesn't mean that it's not a retirement benefit paid to a disabled retiree. So one is a practical English language description of what somebody's getting. Another is a label, and I don't want to get hung up on labels as we describe this. So I think a working session would make it more possible for us to
Josh,
understand
you and I,
that.
my staff can
Yeah,
see what we
that-
can do. to
that's
get
very
that
helpful.
going.
Thank you, Sam.
So we can get this going, because I think we're just going in circles. I'd like you guys to sit there.
Just
talk
for
among
a point
yourselves.
of clarification, for scheduling the work session, would we have an opportunity ahead of time to identify which experts we would like to have as guests
They
at the
would
work
go
session?
through Josh.
All right.
Absolutely. Yeah, no, absolutely.
Okay, as we pursue this, Mr.
I've done a lot of
Stevens.
council work sessions before, so we can work it out.
New process.
Yeah.
yes, Thank you.
Mr. Stevens brought up some other comments and issues. Is it reasonable for us to ask, well, not for an exhaustive list, certainly for you to list and provide to us some specific issues that you would also like to see discussed by the task force?
If that question was addressed to me, I'm sorry, I did not hear it all.
Okay.
Please speak up a little louder.
Yes, you mentioned generally pension and disability, infirmity, benefit equity, or compliance issues. Could you provide us with a sampling of what some of those issues might be?
Some
in
examples of
writing?
other issues?
Yeah, it can be, I didn't
Well,
mean
for
necessarily now,
instance,
but in
for
writing.
instance, the city should have been making Medicare payments for our members for about 13 years, and they didn't do that. We have retired members now who don't qualify for Medicare, and so they're having to buy their own private insurance at about $1,600 a month. The PERS people, because they were part of Social Security, they had Medicare covered for them. It was never a question. And that's a huge imposition on older people when they have infirmities and sickness later in life. And I don't think we should ignore that. I think we should stand up and protect our people. We have a way to redress it. And the city did not do what they were supposed to do. It's provable that they did not make those payments, okay?
So, thank you for that very good example. Could
Yeah.
I request that you provide to us in writing just a sampling of 3 or 4 such issues that you think would be helpful for a task force to deal with? Just so we know. Obviously, the disability retirement question.
That can certainly be done. However, it really, to make it meaningful, it's got to be in a discussion format so you understand both sides of the issue.
I'm simply asking for a sampling of issues that you
Yeah.
might want a task force to discuss, just so we have an idea of the subject matter.
Well, I
As
mean,
we're- because you're asking,
yeah,
you're asking
I'm
that
sure
we-
you wouldn't want to take the time to discuss it now because it gets involved. But there are a number of issues besides disability that were not handled correctly. I was part of that task force. I argued throughout for over a year about including things that should have been covered, and they were not covered. And I know what was left out.
And I'm simply asking because I wasn't present for that.
Yeah.
That it would be helpful for me to have a sampling, just a brief description of the kinds of things that you think the task force,
Well,
if we form one, would discuss at length, as opposed to here.
Joe has a real good recall, and he can do a lot of research, and he can put together some of the examples that are not equal, and our members are being shorted on. Let me give you one example, okay? Are you aware that when a member dies, if he's married, he chooses what his widow will get for her survivor portion? If he's not married, do you know what happens to his pension? Any of you really know? I don't think you do know. I'll tell you, it goes away. The city keeps it. If they're under PERS, they get to elect to include it in their estate for a family member, for a daughter, for somebody like that. About half of our people nowadays are divorced, and so they have nobody to leave their pension to. Is that a fair and equitable situation that could be addressed by the board? PERS members can direct their survivor portion to somebody else. Why can't we do that?
Okay, thank you, Mr. Stevens. And Mr. Jimkowski,
Okay,
between the
well,
two of you, we'll look for a
We'll get
list
something back to you.
of things.
Fair enough.
We need to move on our agenda.
I understand, yeah. Thank you for giving us your time today.
Thank you.
So we have one action item, Resolution 526. I assume, Sam, you're not going very far.
Oh, okay, we don't need, just leave that in, we're doing fine. Sorry, we're getting confused as to what we're doing. Okay. So action item number one, we're looking to upgrade the contract that we have with MHN, our Managed Healthcare Northwest. And so before we go into that, I'd like Kim to give some background on what MHN is and what they do for us and the benefits we receive from them, and then I'll talk about what we need to do with the contract at this point.
Okay, thank you, Sam. So Managed Healthcare Northwest is one of two.
Pull the
Yeah, thank you.
microphone a little closer. Thanks.
Very good, okay. Yeah, Managed Healthcare Northwest is one of two managed care organizations that FPDR is contracted with to provide occupational health care services for members who are injured on the job. So they provide a panel of physicians, therapists, facilities, and all that our members have access to when they file a claim and the claim is approved. And so we've been using MHN since 2010. They provide a variety of services, and they're one of two. The other is Kaiser on the Job, but in speaking about Managed Healthcare Northwest today, they provide a variety of services, including pre-certification of treatment, a medical review of treatment, and quality of care to validate treatment. They do pre-certification to ensure that surgeries, diagnostics, durable medical equipment that might be needed by our members is reasonable and necessary treatment. They certify non-panel providers, so there are occasions when members are treating with somebody outside of the panel, and they will do a certification if that specialty is needed for treatment. They also provide us access to case managers, registered nurses, and doctors. And what they will do for us is give us advice on complex cases and how the treatment can be progressed. And they will also intervene on our behalf and initiate a disability consultation evaluation, which is a one-on-one with a medical doctor and a member's attending physician in cases where we have stalled treatment or there are issues about the type of treatment being proposed to promote recovery. So they will talk with the doctor, and usually they agree with a plan that helps move the treatment forward to the optimal recovery that we can get from an injury. They conduct disability prevention consultations, and they support our philosophy that guides our return to work, transitional duty work program. They also provide dispute resolution if two providers within the panel, if the provider has a disagreement about a course of care for a member, they will step in and offer insight and guidance for that. All of the services that they provided are aimed at helping us ensure that our members get the treatment that they need to promote the optimal recovery from injury. They will also do review and advisories for us periodically, again, as the analysts need particular information about a claim. So those are the services that they provide. They're often complex, but they're very helpful. The panel of providers and the facilities that we use also agree to allow us to reduce their billings to Oregon fee schedule. So the providers are billing, they bill several insurance companies and organizations when they treat members, when they're treating their patients, and what they have allowed us to do again is to reduce the billing to the Oregon fee schedule, which is part of our administrative criteria for this plan. But what they've done in addition to that is they said that we're going to give you an additional reduction, and that is below the fee schedule. And that reduction is going to be split with Fpdr, and that is what we're going to use to compensate us for the services that we provide. So we get an additional discount on the providers, the doctors themselves. We get a discount on the facilities that are used for surgeries and imaging and things like that. And it ranges from 8 to 11%. And whatever that additional savings is, Fpdr splits that with MHN. So we get that additional saving. We report it annually at the State of Fpdr presentations, and the other half of that savings goes to MHN for payment for their services that they provide. And so that's why we're here today, is that the saving, we can not predict always the amount of billings that are going to come in. If we get a catastrophic injury or two one year, we're going to have higher billings, but it always means that we experience greater savings as well. So we are almost at the end of or we have almost used all of the balance of our available funds on the existing contract, and what we'd like to do is extend it so that we can pay for the services that they provide through the end of the contract term.
Okay. Just a little bit of recap on that. So all the services they provide are paid for by us sharing on the savings they give us. So if I just have a quick example on that. So if we have a facility who did a small procedure for somebody and the price, they bill us at $2,000, we get the discount of $200, let's say it's 10%, so the actual cost they bill us is $1,800. So that results in a $200 savings. We keep 100 of that savings. We push back to them the other 100 of the savings. So we end up paying a total of, instead of $2,000, we pay $1,900. So we still get a savings, but we use that 50% of that savings, push back to them to cover all the services they do. This is not a fee-for-service arrangement. Kaiser's fee-for-service. We pay them a certain amount of money. They provide us a certain amount of work, and it's that this is different. This is more, and I hate to use this word, more like a commission type of situation than it is a fee-for-service. The challenge we have is this contract written with MHM was written as a fee-for-service contract, which means we have to have a cap put on it that we can only pay out so much. It doesn't make sense in this one because the more we pay them, the more we have saved. So what we have to do, because we're under that weird contract, is to raise the not to exceed, or the cap amount, and that's what we're coming to you today, is to raise that. And we've predicted that this should get us through, because the contract goes through December of next year, and then we'll do an RFP, and we'll see if they come back or somebody else comes back, and we can take 2 or 3 different MCOs under our RFP to do it. But so we just have to keep that cap limit so we can continue to save through the end of the year. And if they come back with this arrangement and then we happen to select them and they have the same arrangement, I'm going to work with procurement to come up with a different contract so it's not a fee-for-service contract. So that's what we're looking at, is we just got to bump up the cap so we can save more money. And we've projected for this time, what did a 95,000 would push it up high enough that should get us through the end of next year. Again, this is no money that's coming out of our pocket. This just allows us to save money. Again, it's just an unusual way the contract is written that we have to go within. So any questions on that?
No.
All right, nope. Anybody signed up for testimony? Nope. Okay, do I hear a motion?
I'll move to approve the resolution.
Second.
Great. The motion has been moved and seconded. All those in favor?
Aye.
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 All those opposed? Motion passes. Thank you, guys.
Okay, thank you.
And I believe the next item on our agenda is the audit.
Good afternoon. Stacy Jones, Fpdr Finance Manager. I'm just up here for a minute to introduce our illustrious guests. As you probably recall from last year, Fpdr is included in the city's annual financial statements as a blended component unit, but city charter also requires us to have our own separate standalone financial audit conducted each year. So we contract with Moss Adams, an independent audit firm, to conduct that audit for us every year. So up here today is Jim Lanzarada. Jim is a partner at Moss Adams and in charge of all of the City of Portland's audit engagements. And next to him is Keith Simovic, who is a senior manager at Moss Adams and works closely with Jim on all of those, I think all of those engagements.
All of them.
I feel like I talk to him all the time, so I was kind of horrified to find out everyone else is talking to you all the time too. I should talk less. I'll start right now.
Welcome. Thank you. Go ahead.
Thank you. Thanks for the opportunity to come before you and kind of close out the audit process. It's always a little nerve-wracking to have auditors come in poking around, but also a good time for you to get perhaps some assurance or some feedback from us about the things that we're looking at, and some feedback on how well your staff is doing to put together accurate financial information. So what we're going to do, Keith, if you would be we're going to take you through very briefly the nature of the services that you've engaged us to do. And of course, we want you to know a little bit of the details. Where did we spend our time? What were we focused on? Where did we see the risks? And a little bit about the audit work that we did. So Keith's going to help us with that. Anytime we perform an audit, there are some required communications of auditors to governing boards. And so we want to do that. We've issued this in a written form, but we'll just kind of hit some highlights of that today. We always like to keep you apprised of new accounting standards coming at you or at your staff. We'll just mention that briefly. And please stop us anywhere along here to ask questions if you have any. When I think about the audit, in your case, I'd probably break it into about 4 phases. I think when you think of financial statement audits, you think of the auditors coming in and doing that independent verification of the numbers. I think you probably have a pretty good understanding of that. We're looking at the source documents behind the transactions, the numbers that are reflected in your financial statements. We're talking to those that hold your money, in this case, the City of Portland. City Treasury holds your dollars, so we're making sure that, in fact, we're confirming that what's in your books matches what's over there on the city's part. We're talking to your legal counsel and those sorts of things. We're looking at the distributions and the files that you maintain for all of your retirees and the folks eligible for benefits. So you probably have a good understanding of that. A second element that's required in an audit is looking at and evaluating the internal controls, our jargon. But in layman's terms, what are those checks and balances that management uses to make sure that it can put financial information together accurately? So how well are those done? How well are they designed? And in fact, are they being observed? So, and we're here to tell you the results of our kicking of the tires of your checks and balances. A third phase of your audit is what I would call a technical review of this document. You know, you're pretty fortunate that you've got staff either here within the retirement board or over at the city that can help you put this together. In Oregon, there's probably about 1,700 or 1,800 entities that have to put together financial statements, and a majority of them require either the CPA or a third party to put these together. They don't have folks on staff to do it. So we're very fortunate that we don't have to prepare this. We can focus on the audit of it, but we definitely do that technical review to make sure that this follows all of the requirements of the accounting standards that apply to a retirement system. So that would be a third element. A fourth element, which is unique to you, is that you have a unique stakeholder in your financial statements, and that's the city. So your financials reflect the throughput. What's the cash you collected? What are the distributions you made? What's the small balance relative to your plan that you maintain at the end of each period? The city, on the other hand, has to park some pretty big numbers on their financial statements that result from the actuarial work that you engage an actuary to do. So we kick the tires on that actuarial work to make sure that they're following the appropriate accounting standards for a governmental entity, especially given the size of this plan and the impact that it has on the City of Portland's financial statements. So we're doing that work to test the actuarial work and whether that meets all the requirements that the city is dependent upon. So we did that work, and we're here and very pleased to be able to tell you that these financial statements are put together accurately in all material respects. And so we're issuing in our terms, our jargon, what's called an unmodified opinion. And that's the best you can get. So basically that means we didn't have to modify our opinion for any issues that we identified in the audit. So if there were material errors, if there were very material departures from the appropriate standards to which the statement is to be put together under, then we would modify our language in that opinion, and we didn't have to modify it. We like to use the term clean. It's a clean opinion. So a lot of work by your staff and under your direction and under management's direction, you've been able to put together the correct processes that generates an accurate document. The other area is that internal controls I was telling you about. We're worried about the ability to record all the cash transactions. You know, you're funded with property taxes, which the city collects on your behalf. So we're very interested in how well those property taxes are accounted for and in fact those that you're entitled to that fund your benefits, are those in fact being received by you and accounted for in your records and available, and the controls over that. The benefit payments to your retirees and those that are out on disability, how good are the controls over your ability, your staff's ability to calculate the benefits and make those payments accurately and according to the agreement that you have with your employees? So there's a number of other areas too, but and obviously the controls over the actuarial work and capturing that within these financial statements. And we found those controls to be effectively designed, and in fact, they're being followed by your staff, which has also contributed to your ability to get a clean opinion on these financial statements. So all very good news. I would hope you would feel pretty good about the results of that. So after that, though, I think we'd like to share with you a little bit more of the details of where we focus so you can get a sense of the nature of the work that we did. And so, Keith, if you could help us with that.
Absolutely. Well, thanks again for having us here. And again, my name's Keith Simovic. I was very involved with our team during our field work for this audit this year. And I wanted to give you a little bit of time to give you a little more insight into our audit process and how we did our risk assessment, because every audit that we do, we sit down kind of independently each year and we kind of brainstorm where do we feel the most risk is. Have there been any significant changes in the current year with whether that's personnel, new accounting standards, new types of transactions? We want to know where is the most risk, and we want to design our custom-based audit approach to focus on those risk areas the most. So not to say that we're not looking at kind of and risk assessing all the different areas and designing procedures for all the different applicable areas, but these are the areas that we spend the most of our time. And I would say for these first couple items on here, where we've got cash and investments as well as property tax revenues and receivables, those are both areas that I think FPDR definitely benefits from working with us, since we audit the city as a whole as well, right? So we get insight into the treasury function. We're sending out confirmations directly to all the financial institutions. We're looking at the reconciliations that the city does and how everything gets allocated out to the various funds. So we have a lot of insight there and do a lot of work on the city's part that we can use and leverage to help out on this audit as well. And again, on the property tax revenues and receivables, I mean, we're able to go out and send confirmations to all the taxing authorities and districts and everything as well, and kind of work through that process and see how the city has allocated that amongst all the funds. So a little bit of a benefit there rather than working with other auditors that we're having to work through in that case. And so that covers kind of cash and investments, property tax revenues and receivables. I mean, those are large balances that we're spending a lot of time on, and we want to make sure the activity that's running through and how it's being allocated to FPDR is appropriate. Pension liabilities, I'd say this is one of the biggest ones, not only because it's a large number for these financial statements and a large disclosure, important disclosure, but also because it flows through to the city's financial statements and has a huge impact on those financial statements and the users of those financial statements as well. So it's a big number, and there's a lot of estimation and assumptions and judgment that goes into that. So that's an area that we spend a lot of time looking at. Well, what were the assumptions that went into those valuations and those actuarial calculations? Are they reasonable? Are they appropriate? Are they in line with what we've seen on other similar valuations? And so that's an area we spend a lot of time looking at those assumptions to make sure they're appropriate and in line with what we would expect in general. We also look at kind of the underlying data that goes into those calculations. So any of the census data that is sent from FPDR to the actuary to do those, we're looking at that data, making sure it's appropriate, that it's backed up by personnel files, and that all that census data is accurate and appropriate. And so we're spending a lot of time there and making sure we're kicking the tires that all the inputs to that calculation are appropriate and driving an appropriate liability that comes out of that. Another area where I'd say we spend probably the most of our time is really with the benefit payments, whether that's retirement or disability benefits, because that's where your staff have their hands in it the most, right? They have to have good controls in place and be able to monitor that process to make sure that you're paying the right people at the right amounts at the right time. And so that's an area that we spend a lot of time looking at. Well, what are the underlying policies and requirements that the staff should be held to? What are those internal control procedures in place? Are we seeing that those policies and procedures and controls are consistently being followed? Are we seeing any deviation from that? And I think there's a lot of benefit to having a lot of consistency with some of the staff here. I mean, we've experienced very knowledgeable people at FPDR that are able to carry out these transactions with very high level of accuracy. And so we're not finding a lot of adjustments or material errors that come out. And that's why we're able to kind of come before you today and give a clean opinion. So I think that's very important. So we spend a lot of time looking at that. And that's probably one of the highest risk areas. So we spend quite a bit of time pulling larger samples in that area. And then the final one, financial close and reporting. This goes back to all the internal control procedures that go on throughout the year, monthly reconciliations, review and approval of journal entries, putting together this document, making sure that it includes kind of all the bells and whistles that the governmental accounting standards require, and what internal review processes are in place to look at that, to make sure that this is appropriate before it gets to us. And that way we're not finding material adjustments again, or we're not having a lot of edits and changes to these financial statements. I mean, I can say, through all of our levels of review where we're looking at all the numbers that go in here to make sure they're accurate and tie back to internal records. We're making sure that we're going through a technical review that me, Jim, and our concurring reviewer are doing. We don't have a lot of significant comments that come out of that process. Management does a very good job at putting this together and doing it accurately and making sure they have good controls in place to check that. So they're catching errors before it comes to us. So I think that's very important. In addition to that, I wanted to go forward and talk about some of the required communications that Jim mentioned. Again, this is something that our professional standards requires that we go through with the governing bodies of all the audits that we do. And these are things that, whether we found anything or not, that we want to bring up and let you know if we ran into anything. One item in there is always, restating what our responsibility is, and that's really just that we are performing the audit of this. We're giving an opinion over these financial statements, but we're not putting this document together. As Jim said, sometimes we assist our clients with that, but in this case, you've got the staff that's got the knowledge to be able to put this together. They're driving all the numbers that go in here. We're not putting together any of the numbers, figures, or disclosures. That's something that comes from management. We're giving an opinion over that. Significant accounting policies is a section in here right after the main financial statements. That's an important area we always bring up and something that we spend time looking at because we want to make sure nothing significant has changed from year to year. You don't want to see that management is consistently changing certain estimates and things that go in the financial statements or how things are accounted for from year to year, because that could change how the numbers are derived, and that's something that you generally wouldn't expect to see to change significantly from year to year unless there's an accounting change, which luckily this year, first time in a while, that's been kind of a quiet year in terms of accounting standards and is in terms of their impact on FPDR's financial statements. So very consistent, you'll see those accounting policies this year. Another area we spend a lot of time looking at is accounting estimates. And again, you have a massive one in these financial statements with the pension liability. And so that's an area we always bring up just to let you know that even though you might think that all the numbers in here, there's hard, fast support for it, right? That there's a dollar that you can trace that to. There's an underlying invoice or something like that. In the cases, there's a lot of estimates that go into these. And of course, the pension liability is a huge one. And so that's an area where we're very sensitive to that. And we want to make sure, again, that the assumptions are appropriate, not out of line with what we generally see. Audit adjustments is an area that we would bring up if we were running into issues that we had a material error to the financial statements. Wouldn't necessarily preclude us from giving a clean opinion if we identified something and management made that adjustment, but that would be something that we'd want to bring to the board's attention to let you know that, hey, we found this error when we did our testing after we arrived on site and all the information we were given. We started our testing that we found a material error, but good news is this year we don't have any material errors that came up. So again, very clean records as we arrived on site for the audit. We didn't have any disagreements with management, and that's not to say that we don't have good conversations throughout the year. As things come up, as new accounting standards come up, we are in contact with management and having a good discussion, good back and forth, and we want to make sure management's not taking everything we say for gospel, and they don't, and we have good discussion and come to a conclusion and don't have any outstanding disagreements at the end of the audit. And we didn't have any difficulties in performing the audit. That really goes back to scope limitations. So if there was anything where we came in and we were asking for a number of different documents, which we do every year, but management is gracious enough to provide us with all those documents and answer all the questions that we have. There's nothing where they say, hey, you can't look at this, or we're not going to give you a response to that. That would be something important for the board to know and would potentially preclude us from giving a clean audit opinion if there were certain areas we couldn't look at. So had a very good working relationship with management and got the documents that we needed to complete the audit. And in terms of the internal control procedures that Jim had mentioned, that's a huge part of what we do and drives our audit process quite a bit. And so we want to let the board know if we ran into anything that we would consider a material weakness in controls. That would be something where if management had a lack of controls, or if they had those controls in place, but we were finding, hey, it's not consistently applied, and we think there's a hole in controls where something significant or fraud could slip through the cracks and not be identified or detected with the controls in place. That's something we want to bring to the board's attention so that you know and can work with management to address those items. Through the procedures we've done, we don't have any material weaknesses that came out of the process this year. Controls have been very consistent from year to year, and through the testing that we do to look at actual evidence backing up those controls as they're stated, we have evidence to show that those controls are being applied consistently throughout the year, which I think is important.
Could I ask, if you found a problem in one of these and then they corrected it while you were there, they realized, would you still be reporting that to us? Or if it gets corrected, then there's no reporting?
Correct. If there's something that's identified by us during the audit process, that is something that we would bring to the board's attention to let you know that.
Even if it was corrected?
Yeah.
Correct.
Oh, okay, thanks.
There's kind of a presumption in the auditing world that if there is an error, for whatever reason, intentional or unintentional, most of the time they're unintentional, that there's a problem with a control somewhere. And so we need to bring that to your attention. Usually, by the time we get to you, for governing boards to give this type of report, management's already corrected the item and they already have started to implement some kind of a change in controls. But we still have an obligation to bring that to your attention so that you're aware and can obviously work with staff to make sure they continue to implement whatever action plan they identified to address that problem.
Yeah. That's great. That really shows that they're doing a good job because you didn't have to tell us
Absolutely.
anything.
Absolutely.
Thank you.
Yeah, one additional thing I would say, we really appreciate a consultative nature with our clients, and your staff has always been that way. Maybe prior to your time on the board, I don't know when your term started, but there was a very big accounting change when GASB 67 and 68 came around, and that really impacted the city and how the city reports their participation in this plan within their statements. But it also required a change in how your actuary does their work. The actuarial cost method had to change. And one thing I appreciate about your staff is that they were aware of this accounting standard and they worked with us and we developed a plan because it took a long time to get that implemented, to get into a place. If you think about, how often you have an actuary actually do the valuation for you and when does that occur and when do these changes need to be adopted, it's just an example of the consultative nature of your staff working with us, making sure we have a plan and we can implement it, and then no one skips a beat. The city doesn't have a problem with any of its reporting, and obviously they have a plan so you can meet your reporting obligations as a retirement system, and they continue to be consultative on even more minor matters that might have an impact in our work as your auditor or what would need to be displayed within the covers of these financials. So anyway, just hats off to them for reaching out when they feel that's appropriate.
Thank you.
The last thing I'd say is just, and again, we'll open it up for more questions that you have, but there are a number of accounting standards that are in the works. Some of these are really more impactful to the city, not for you. One is GASB 84 on fiduciary activities. You're already considered a fiduciary of the city. And so they actually take your financial statements and they drop them right into theirs. So within the covers of their financial statements, they kind of grab yours and just drop them in. In addition, though, they have to report that net pension liability in the face of their financials too, something yours don't. You disclose it, but it doesn't run through your statements. So you're already picked up. But a lot of governments have fiduciary responsibilities where those activities are not reflected in their financial statements. So 84 just kind of sets the criteria around when you have to include fiduciary activities within your financial statements. And then there's a number of things that the board is working on that might change the form and format of your financial statements going forward. They're still deliberating, so it'd be a number of years down the road before you would be impacted by that. So not a lot on the horizon that's going to impact you in the near term with your particular statements. And we just want to make sure we're responsive to any questions that you have. Pretty quick, even if it's only 15 minutes for what takes all year for your staff to do, and weeks to prepare this document, and weeks for us to audit it, and we get to tell you the good news in about 15 minutes.
Short and sweet. Anybody have any other questions? Thank you guys very much, and we appreciate the good news.
Thank you.
Appreciate it.
Thank you. All right, the next item is overview of interim disability benefits, which I assume we have returning contestants here.
Did you save it on here, Sam?
I didn't save it on the machine.
Get in the weeds in a hurry.
We don't have that. It's not popping up the,
Yeah.
on the bottom down here. We get our IT person here.
Fair enough.
Yeah.
Can't find where
So that's your USB drive?
Yeah.
So generally you want to go and look for your yellow folder.
Yeah.
So that would be on my computer.
PDF version right there.
Yeah.
There we go, thank you.
Thanks for making it easy on me.
Yeah, thank you.
There you go.
All right, got the technology working. There we go. So today I am going to take a few minutes to talk to you about interim benefits. This is being done in follow-up to the discussion on interim benefits that you had during the September board meeting. And so today I'll provide a brief history of member payments for time lost prior to passage of ballot measure 26-145 in November 2012. That was the measure that introduced the allowance of Fpdr to pay an interim benefit as of 1/1/2013. And so since that time, we've been paying an interim benefit to our members. We'll talk a little about that. And then I just want to walk you through the repayment process. There were some questions about that, followed by a snapshot of interim benefits by the numbers. And I'll explain the distinctions among the slides. I only have a few slides today, so I think we'll be able to walk through them pretty quickly. So first of all, prior to January 1st, 2013, when a member lost time from work for an injury, he's filed an application for benefits, and they were off work for an injury, they had to use their accrued leaves, their personal accrued sick or vacation leaves, for compensation while they were out on injury until FPDR made a decision. Once we made a decision on the claim, we would, and approve the claim, we would restore the the sick or vacation leave that was used during that period of time of review. And so it was something that was rather difficult for the members. If you can imagine that they may have had a history prior to even filing a claim that involved the use of those leaves for other reasons. And there were times where it was possible that the member would go without pay if they didn't have those accrued leaves to use. So the allowance of an interim benefit for our membership was very huge and very helpful for our members. Sorry about that. So after January 1st, 2013, the allowance for an interim benefit became part of our rules. And what that meant is that FPDR would pay an interim benefit upon receipt of a complete application for benefits. That is the disability and line of duty report, the attending physician's report, and a work status report, which is the physician's authorization of their time to be off work. So we would pay that benefit. This meant for the members that they would not use accrued leave, rarely, if at all. But what the new rule also imposed upon FPDR was a requirement that if the claim that was filed was withdrawn or denied and the denial came final, the member had to repay that interim benefit. So when we have completed our review of a claim and have made a decision to deny a claim, or the member has withdrawn a claim, and the matter is final as far as any appeal rights in that are concerned, what we do in the process of an interim benefit case is we send a letter to the member, and that letter is sent to the member certified in regular mail. And what that letter explains is that you filed the application for benefits with the understanding that if your claim was withdrawn or denied and became final, that you would have to repay that interim benefit. So we let them know that that the matter is final. We let them know the amount of interim benefit that we've paid during that period of disability, and that the payment is now due. The letter also includes a form which is in a list of options that the members have for repayment of that interim benefit, and those options are consistent with the requirements for repayment in our administrative rule. So it mirrors that, and the member has an option to pay us by a check, pay in full by check, or they can authorize their bureau to deduct payments from their pay, and they can use a combination of accrued leaves on the books that weren't used during that process, or they can have the city authorize payments, just payments that don't involve the use of accrued leaves. And one of the other things that we provide as an option is that the member can contact the director to come up with an agreed-upon repayment arrangement. And so they have this timeline to look at the form, look at the options, and to return that information to us. Once we get their repayment form, then that form is given to city payroll, where they make the deductions as permitted by the member. So we do have some timelines within which we let the members know the repayment is due. And per the administrative rule, that's section 57114 of our administrative rules, the member has to repay in full within a period that is no greater than 2 times the number of weeks that the interim benefit was paid. So if we paid 6 weeks of interim benefits, they have 12 weeks to pay it back. The director certainly has an option if the member comes back to us and says that the repayment period for whatever duration of the benefit has been paid is a hardship, then they can come to the director and request authorization to extend it, and that's something that we do. If we don't get feedback from the members, if they don't respond to us at all, we do send the letter, sometimes we follow up with another letter, or we call. If they don't communicate with FPDR at all, then we would exercise the administrative rule option of legal action to pursue recovery. So interim benefits are paid, and first of all, I will apologize for this slide. It says interim disability benefits by fiscal year. We elected to go calendar year because the rule on interim benefits became effective 1/1 of January 13. So this slide represents calendar year information starting from that date. So from January 1st, 2013 to October 31st of 19, which is the period we're kind of talking about today, 1,308 members were paid a disability benefit. Of that total, 613 members were paid an interim benefit. Now, remember, a lot of our claims are approved very quickly. We provide that information often in our State of FPDR slides. And so a lot of our members aren't needing an interim benefit. The claim is received, reviewed, approved, and they just get a disability benefit. So we
Excuse me.
have.
Oh, sorry. I just wondered, could you repeat those numbers again? Are they not
Sure.
on here?
I apologize for
Okay.
that, yes. So from January 1st of 2013 through October 31st of 2019, we have had 1,308 claims where we've paid a disability benefit. So they all received a disability benefit. Of those, 613, which is broken down in the numbers on the slide, were interim benefits. So most of our members will get a benefit that is not interim because we've made a decision to approve. So the interim benefit is only paid if we haven't made a decision and we have to pay that benefit while we are reviewing the claim. Does that help? All right. And so what this represents, and there's no grand total, my apologies for that, are the 613 claims where an interim benefit has been paid. Of that number, 569 of these claims were approved. So we have the portion of our claims where they're just paid a benefit on an approved claim. We have 613 claims, which is represented here by calendar year and not a total. My apologies for that. And of those 613 claims, 569 were approved. If the claims are approved, there is no benefit to repay. They are entitled to those benefits. So what that left us with was 44 claims, or 7% of the claims filed over this period, where the member was required to pay an interim benefit. That, again, is that the claim was denied or withdrawn and became final, and they were required to pay an interim benefit. Make sure I get this. Sorry, I'm just making sure I follow along here. So on this next slide, we're showing the range of interim benefits that have been owed since January 1st of 2013. And you'll see that on this slide, 23 of the members owed dollars within the range of $1,000 to $5,000. Nobody owed $1 in an interim benefit. That's just a range for purposes. I think the lowest we've had in an interim benefit that was due is $228 when we look at that $1,000 to $5,000 range. Average within that range was about $2,500, but the greater majority of members fell within that range. And then, of course, we have 7 in the $5,000 to $10,000 range, and then 5 in the $10,001 to $15,000 range, and we've had 1 in the $15,000 to $21,000 range, and I think that one was $20,230 thereabouts that the member had to pay. Certainly, this is a case that was very complex and took time to evaluate their entitlement to benefits. Ultimately, it was determined that they were not entitled to benefits.
Does this amount include time loss?
Excuse me?
Does this include time loss?
Yes.
So
Yes,
some of
this
this
is-
money can be paid back out of time accrued. Is that correct? So
Out of
out of accrued
accrued-
time. Like if I get a
Yes.
day off and you pay me in the interim, and then I get denied, you can just take my day from my vacation.
Yes,
Yeah.
that's one of the options that the members have, is to use accrued leave that was held during that time.
You're putting it in dollar amounts here?
Yes.
Okay, very good.
Yes, yes. So the next slide, and I hope I'm not going too fast here, let me make sure. Went through the process of recovery, the amount owes, and this.
The next slide.
And
The
this-
next slide answers my question.
Yeah.
There we go.
Thank you. So this next slide is representative of the breakdown of repayment methods that our members have chosen. There are, I think, 30 claims represented here, and that's just because these are claims where everything is final and they have given us repayment options. We have some existing claims where we don't have repayment options yet and the process hasn't begun. So what I chose to present here was those that are actually complete through the process, and they have, a repayment method has been chosen. And in the majority of cases here, you see that 23 of the 30 represented here use their accrued leave. So a lot of our members, when they file claims, do have an accrued leave bank. Again, this is for a claim that is not compensable. They would have used that accrued leave if the illness or disability required time off outside the FPDR arena. So it is fortunate that they have that accrued leave. 3 of the members paid back by a personal check. 1 of the members used a combination of accrued leaves and a personal check. And then 3 members who did not communicate with FPDR to make repayment arrangements had the need for us to pursue collection. That is rare, fortunately, but we work with we communicate with our members, we call, we leave messages, we want them to engage in dialogue with the director about repayment options if the repayment has some effect on them that makes it challenging for them to meet the deadlines that we have. And when they don't, we pursue the administrative option
Kim,
permitted.
Can you remind me of the available repayment options?
Yes, yes. So the member can repay by personal check.
Oh, I'm sorry, the time periods?
The time periods.
Yes.
Yes. So the time periods, a member has 2 times the number of weeks that an interim benefit was paid as a first option. So if a member was paid an interim benefit for 6 weeks, we give them 12 weeks to repay. Okay? And then and that's pretty much standard. Of course, they can pay by check. And what we do, when we send the repayment letter, there's a 14-day timeline that we allow them to just look over their options. I would also add that by the time we get their form back and get it through payroll, there's still some time there that is not calculated into the administrative allowance. Administratively, they have 2 times the number of weeks paid to pay the benefit
And
back.
is that pursuant to Administrative Rule 5.7.14?
Yes.
B, that's referenced in the
It's, if you look in
presentation.
the very last
Yes.
page under this tab, you'll see what you're talking about is paragraph 4 at the bottom of the page.
Maybe I didn't get that. And then my next question is, oh, I see it now, thank you.
Yeah.
Is, it sounds like the director has authority to grant extensions on that time?
Yes, the director can grant an extension up to 12 months as the administrative rules currently exist for repayment of that benefit.
And the key to that here, as you'll see in the rules, is undue hardship. Some of the people, due to some extenuation, needs additional time, and I work with them.
How many times can you do that? There's no written of a no, so could you, if facts were to come before you, you could decide a second 12-month extension?
It's only one 12-month period here. I can't extend it beyond 12 months. I mean, so that's the max I can give to them on it. And so I don't know how many times I can do, about 3 or 4 times over the past year and a half, to where I've talked with people and we've extended stuff out. Some of it's been out 6 months, 9 months, or 12 months, just depending on what's appropriate when it comes up with a certain monthly amount that they need to pay.
And just a quick question. So they don't pay any interest if you extend that, right? It's just a flat
Correct. There's no
dollar
interest
amount
on this.
from what they owe. Okay.
Correct.
Is there a cap on expenditures? I mean, 20 grand's 12 months isn't ridiculous, but, you know, it's a major procedure, major surgery, and gets denied. We're at $150,000, right? I mean, is there a cap of any kind?
You know, we haven't had it be that extensive. I mean, I haven't calculated out maybe what the highest earner would be at 90 days of interim benefits paid. Is that where you're coming from, Brian?
Yeah, maybe it's some type of procedure that needs to be done to, I don't know, an injury to the eye that needs to have a medical procedure to save the retina or whatever. I'm using a hypothetical here, and it needs to be done. And then after the procedure's done, it's like, well, that was actually caused by something else that has been denied, so now you owe all this money. I mean, I guess they could turn over their personal insurance maybe, but
But these are disability
Yeah,
payments.
these are just disability payments. The medical, when a claim is pended, the medical is usually covered under their private health, and we have a coordination of benefits policy that we use with Moda Health. So the treatment is not an issue in this piece. This is just the disability benefit, the time loss benefit. Yeah. So this, the benefit, what I've noted from January 13th to October 31st, if this helps you at all, is that the cases where we are having an interim benefit payment represent roughly 2% of the claims that we administer. We've administered about 2,344 claims over this time period, and it is from January 1st of 2013 through October 31st of 2019. And the interim benefit repayments represented 2%, roughly 2% of the cases where a repayment was due.
And I believe what Alan was concerned about were some of these ones on that bar chart that were to the higher end, because those were some, $20,000 or $15,000 can be substantial, even if you happen to be able to do it over the max, which would be 26 weeks is what we would normally have them, because they get 13 weeks of or 90 days of interim, so they'd have it. And then even if I stretch it out to 52 weeks or 24, that still can be a sizable amount. And I think there's been a few concerns. And I do unfortunately think one of the examples Alan was using, if I get it correctly, was one of the people that failed to talk to us. And what we do, what I want to stress what Kim does, is we send out 1, 2, or 3 letters. We often send the fire liaison or police liaisons out to them, try to talk to them face to face, let them know. Then they do get a legal letter saying you must do, or else we're going to take these actions. And these 3 people just plain did not respond to any of those things, made no attempt to negotiate. Well, one made a lame attempt to negotiate and then closed off and didn't follow through. But that's where those 3 are with that. But anyway, so I think what Alan's referring to are some of these higher dollar ones. Is 12 months still too short of a time period for them or not to repay?
And that would be the portion that the member repays and doesn't use accrued leave to repay.
Yeah, we're talking, the people we're talking about here, as you see in this big pie chart here, high percentage of them have enough in their leave banks to pay us back with no problem. And everybody just likes that because it's a clean accounting transaction behind the scenes, and they give us permission to do that. So that's the cleanest way, that's the fastest way to do it. I think the ones we're talking about are the ones that probably fall under the personal check type of thing. Some of them, we've done different things with them, even allowed some payroll deductions that fall under that concept of personal check. But this small group here is the ones that, it's a big dollar amount for some of them.
And they don't have accrued leaves to help offset.
Yeah.
I have a couple comments. Thank you, good presentation. Thanks for reminding me a lot of things that have gone on over the years. So I was involved in these discussions that changed this back in 2012, 2011. I wasn't a board member at the time, but through Fire Bureau and our union. And this was before the 2012 charter change. And we were in discussions, and then at the end, we were moved out of those discussions. So our groups were not able to finalize this stuff and really come down to a good conclusion. While it's different than what we had before, it is still kind of a strange system how it's done compared to other systems, as far as I know. So while it works on some levels, I still think that it probably could be improved somewhere down the road. So I would like this discussion brought into possibly this task force that we're going to put together. And while we talked about not necessarily equal to or better to, but I know the PERS members, workers' comp, they have a completely different system than we have, and I know their interim benefits are handled differently. So I would appreciate if we do put together a task force that this issue is brought forward and maybe compared and talked about to other systems and what they do and what the rest of the employees of the city what their benefits are and how this works, and see if it's equitable. If we could.
Any other questions?
No, I appreciate the follow-up.
Oh,
Thank you.
Yes, thank you
Thank
guys
you.
for following up, absolutely.
Yeah.
Thank you.
Next on the calendar, yep, sorry. Oh, I'm sorry. By all means. My apologies.
No, not at all. Chair Harwood, and members of the board, introduce myself. I'm Nelson Hall, an attorney with Bennett Hartman. Have the honor, the privilege of serving as counsel to fire and police in the city of Portland, specifically as to their disability, as to Fpdr. Representing individual firefighters and police officers, as well as advising the associations. Why did I sign up to speak? And that was kind of almost, it's not as a placeholder, but for the opportunity to take, 3 minutes to encourage this subject, as Trustee Lehman was just referring to encourage that this issue be placed on the agenda of a task force to be looked at. I have no qualms with the numbers that were presented and how how this system of repayment and collection works. My comment has to do with whether or not this really is the system for interim benefits that the trustees want. As Trustee Lehman referred to, the negotiations that went into developing this interim program. And I was at that table and part of those negotiations on behalf of the associations at the time. Interim benefits, as has been adopted by charter and by rule for Fpdr, is unique in workers' compensation systems, at least in the state of Oregon. Interim benefits in the rest of workers' compensation are not repaid. Interim benefits are a cost, they are a part of doing business. They are a part of the cost of a workers' compensation system. And I will not take time now. If I'm invited, I'd participate in a task force to discuss this at length. But one can only stop to think, almost common sense, of the potential chilling effect on making claims because of the risk of having to pay back. And we're not talking about claims that are fraudulently filed. We're talking about righteous claims that ultimately on the medical merits or the legal merits are not found to be compensable. And in those situations, then the benefits, at least in this program, those benefits must by charter be repaid. Trustee Hunsinger, your question in terms of a cap, is there a cap on this? The answer is no, because the development, the amount of the interim benefits to be repaid is reflective of how much time it took the staff, FP&R, to make its decision to accept or deny a claim. They accept it, beautiful, rock and roll. There is no repayment because those benefits are not really deemed interim benefits. They're part of it, right? But the claim is denied. Well, if it took 90 days for the decision to say yes or no to the claim, then you have 90 days of benefits to repay, 120 days, 30 days, et cetera. So that's what drives the so-called amount or cap, if you will, for repayment. Issues that can come up, again, for discussion with the task force is this notion of collection. I know I have one client, one former retired member of one of the bureaus, and you know what? The appeal for that claim went up through the Oregon Court of Appeals. It went, I mean, it was a long, hard fought. Ultimately, the denial was upheld. Now, those interim benefits, of course, stopped once the claim was denied. Again, they're interim benefits. But without getting into specifics too much, how will the fund go now to collect, to repay those interim benefits that were paid? The member's retired. What happens if the member's not only retired but deceased? Where is that collection effort going in terms of getting this? And by the way, if double check my arithmetic, but using the statistics here, it appears there are 36 that are under some repayment effort, be that collection or using accrued leave, 36. And even if we were to use the maximum in those ranges, for example, 23 at the range of 1,000 to 5,000, let's just use 5,000 and multiply it by 23, et cetera, et cetera. So we're talking about 36 claims for a maximum most of that range of $281,000. So the question becomes philosophical, it becomes policy, and that is for $281,000 max, should that be collected, or should it be a cost of coverage as it is in the rest of workers' compensation? So that's, again, my purpose today was just to almost introduce a question or series of questions for consideration, because when we go back to 2012 and those efforts, this notion of collection, repayment, was purely policy, philosophically driven. Those who were around that table saying, wait a minute, we don't want to encourage bad claims and so on. We want to be able to collect this. We owe it to the taxpayers to collect these benefits back. That, again, is a policy decision, which may well want to be revisited by this Board of Trustees. Thank you.
Thank you.
Thank you.
Before I move on, anyone else signed up?
Just real quick comment.
Yes.
Nelson, the person you're referring to for that, the claim had gone up through the Supreme Court, I was on the phone with him yesterday, and we're talking over some options with him.
Very good.
So,
Thank you, Sam.
yep.
Okay, now I think we're moving on to board handbook updates.
Oh, let's see what I've got here. Franco, this is where you're up to.
Good afternoon, Mr. Chair, trustees. Franco Luchin from the City Attorney's Office. And I just wanted to just very quickly just remind the board about restrictions on political campaigning that apply both to public employees, and the Attorney General's Office also applies that to public officials, so therefore boards and commissions also fall under those rules. If the board hasn't already received it, there's an August 21, 2019 memo from the city attorney that outlines the rules that apply to city employees and to boards and commissions. The majority of you, there's going to be kind of an overlap. And in essence, you need to be careful not to campaign for ballot measures, to express political opinions, to work for or against political parties, et cetera, while acting in your public capacity or your official capacities as board members. And there are, I don't want to get too far into the details on this, because I think the memo from my office does get pretty specific and is a good resource, but I would encourage, if we get into a campaign season, and anybody has a question, to contact our office through Sam or just directly is fine. Most of it is going to be straightforward. I don't think you'll find a lot of surprises. I guess the other thing I would encourage you to do, in addition to looking at that memo, is we can provide you with a link to the Secretary of State's restrictions on political campaigning by public employees, which also deals with public officials. And it explains, when the types of situations where you're working in your official capacity, and that's mostly for this board, I think, going to be at these meetings. And then to the extent that you might campaign, to have the disclaimer that you're not doing it in your capacity as a board trustee, but as a private citizen or in some other capacity. And this, Sam didn't ask me to do this because of anything in particular, but we just want to have this regular refresher as the boards change over the years, and make sure that you all have the information you need, because there is potential for personal liability for violations of the state law. And that's really all I have. I'm happy to revisit the topic in the future if anybody's interested, if there is a ballot measure or something that the.
Could you send the memo to Sam, and Sam, would you distribute that, or would your office distribute it?
I was going to say, I can forward.
we'll work it through
I can
Kathy.
forward
Yeah,
it to
and
everybody.
we'll
'cause I have it.
we'll send you the Secretary of State's handbook as well. It's about 20 pages, but it gets into some examples which could be helpful as they come up.
And Kathy does forward those when it comes out. She makes sure you're forwarded, but we'll go ahead and send this again for you. Do you have it?
Thank you.
Board have any questions right now? Okay, thank you.
Thank you.
Okay. This next item should go pretty quick. Board handbook updates. It's under tab 4. I think I sent this out to you several months ago. Just I'm going to quickly hit the high points because these points were added to the board handbook. One of the things is just want to make sure that when you all have discussions with your peers here outside of a formal meeting, you have to keep in mind that if 3 or more of you there are talking, it could be considered a public meeting, no matter where it is, no matter what is going on. As if you were talking anything related to FPDR, any type of issues, any type of actions you want to take, or any deliberations, that's considered a public meeting. And those have to be declared, and public has to be allowed to know when it is and to attend. It sounds pretty obvious, but sometimes, people, wow, gee, did you hear that? Here's what my thoughts are after you have to be careful of that. Telephone conversations, same thing applies. Text or emails, anything happens, and it also occurs is, let's say Catherine and Jason talk an issue, then Catherine immediately picks up the phone and talks to Josh about the issue. You now have 3 people that have talked out the issue, maybe 2 separate phone calls, but you now have done sort of a telephone game, literally, of passing and discussing. Bring that up because, and also emails are the same way. The second you get a third person involved in this conversation, it becomes potential public meeting. There have been some organizations around the state that have gotten in trouble for this, to where the boards or the commissions go behind the scenes and they do everything via email. And what they've had to do is negate the votes they've taken because they deliberated in a non-public meeting. They had to redeliberate in a public meeting and re-vote on those topics. So it's just to keep us in line with it. And again, so that was just to bring you up to speed. So anytime there's 3 of you talking, you need to be doing that. Be careful. Now, we had the training sessions over the past couple of months. I want to thank you all for attending those. Those were not considered public meetings because all the questions, you were being given information and you asked questions about the information. There was no deliberation, no issues brought up or discussed in those meetings. And the people that were running those meetings were very key that they would have stopped you if there were any questions that had broached into that. So that, per Franco, was not a public meeting. So any questions on that? Okay. Casey, you get your 1 page here, the budget.
Just our usual summary of fund expenditures. Since we send this out a couple of weeks before the board meeting, you'll notice that October had not closed yet, so you're really just looking at 1 quarter of expenses there, July, August, and September. Nothing exciting to report, except it's kind of fun to see that our property tax number is negative. But that's just because we have to accrue property tax revenue back to the prior fiscal year, and we haven't received enough property tax revenue this year to offset that negative accrual. If you're, I'm sure you all noticed that. It jumped right out at you, right? But now we're rolling in property tax revenue. I can tell you,
now.
Josh I'm sorry, Chair Harwood it's flowing in right now. So it'll look good the next time you see this. But are there any questions?
Okay, jump over here to tab 6. You'll notice under tab 6, you have the disability programs, the approved denied slide. You asked us to update that top line because that was run right after the fiscal year. So this was run just a few weeks ago. So this should be the updated final version of that for that top line. I think we had a big gap between approved and denied. And so this is the actual number on that one. And that's always one risk that we have when we do that state of FPDR, because you're pulling data quick and you still haven't resolved all the claims that had been received in the prior fiscal year. This has that. One thing that it's not in the book, but I think we emailed it to you, was the proposed agenda for next year with it. We did double and triple check my dates with it. So is there any issues with this? We did move March up a week because not to conflict with the spring break, and moved Thanksgiving, November up again a week because of Thanksgiving that week. So if you don't, we'll just go ahead and take the proposed off this and publish this. If you have any questions or issues with it, let us know and we'll.
Anybody have any problems?
Nope.
Go through
Okay.
that.
Great, thank you. Anything else?
I got a couple more little things here. Slow down.
Fire
Get you out of here.
away. Yeah, I'm in no hurry.
Catherine McLeod, Trustee McLeod's tenure expires December 31st of this year. She will be voted on in the city council to extend it another 3 years. So the mayor and Commissioner Hardesty, and along with the recommendations by the FPDR staff, felt that we should be keeping Catherine on for the next 3 years. So it should be just a mere formality tomorrow morning with it. And no, Catherine, you don't need to show up because hopefully this is just one of those little quick votes with that. So that's exciting there. One last thing here. So future meeting agenda. So January, we have the budget is the big topic. I will start, we have a legislative session this year. It's from February 3rd through March 8th. So it's between the January and the March board meetings. I will give you an update at the January meeting to see tell you what we know maybe came up in the legislative session. I'm not hearing anything that could potentially impact FPDR. And then in the March one, we'll give you how everything went during that time. The one thing that is coming, there are a lot of initiatives coming through that are supposed to go on the November ballot next year. 3 or 4 of them are going to deal with PERS. They're all in the very, very initial stage, and I don't think any of them are started signature gathering yet. There is one in that list that would be extremely detrimental to FPDR. And I'm not going to go into a whole lot. If it builds up some steam by January, I'll go through it with the January board meeting. But right now, they have not even been approved to gather signatures, but we're watching that one very closely to see if it gets up ahead of steam. And then we'll bring it up to you and show you how it will impact FPDR.
What's the general nature of that one?
It means we can't run a deficit. We have to be fully funded from year to year.
Oh,
And we don't fully fund because we're a pay-as-you-go plan. And I don't want to get into the nuts and bolts because we'll just wait until see if this gets ahead of steam. And if it does, we'll have a couple people up here explaining. I think Josh is well aware of this because it will impact all PERS and PERS employers too with that one. So, but anyway, that's a little bit, so just keep in mind because you may go, oh my God, if that comes through and it's getting ahead of steam, you want to go out, how can FPDR get out in front and challenge it? We can't. That was what Franco was here saying. We can't campaign, can't go for or against any initiative at this point. But anyway, we'll bring that up in January with any other type of legislative update. Again, this one, I just don't see anything. I don't even think they're going to be tackling PERS themselves, but you never know who's going to throw what bills on the table, and I should have a good understanding of that by the next board meeting.
I think that's right.
Thank you.
Anybody have anything else? I'll entertain a motion to adjourn.
Motion to adjourn?
I'll second that.
All those in favor?
Aye.
Aye.
This meeting is adjourned. Thank you.
Thank you.
Excellent.